You'll be glad to know that this time is different. Bitcoin broke March's monthly high, which canceled the macro bearish signal from the top. The signal which essentially called the top in December and January, the signal that called the top from March 2024 that led to a 30+% correction, same sort of deal here. And this time on the macro, it has hit a higher price, now canceling those three red signals down. On top of this, the US dollar has closed at a lowest price in around 37 months. This is on the weekly chart, and the monthly is coming up in just 3 days' time. Typically when this happens, we see another big move to the upside from BTC. So this, on top of what we've already seen with the Bitcoin price and the signals getting canceled on the bearish charts, is looking likely that we've got further upside to go here for BTC. In addition to that, the USDT dominance is also breaking down, breaking past key levels that we've been following. However, still holding above the elusive 50% level. Even more to go. I'm looking at the global money supply. I had an interview last week with Real Vision discussing all things like global money supply, assets, and things like Bitcoin and SUI on top of the real estate cycle. So I'll share a little of that with you in terms of how to choose the right assets for this global money supply that's coming up. Like, subscribe at your home of macro cycle analysis. We've also got a sale coming up for TIA Premium this week, but I'll talk a little more on that later. Let's dive into the analysis thus far. And as I led with in the intro, looking at the 3-bar rule, high and the high going lower than the top, which essentially leads to further downside. Now, fortunately, in the last few trading days, Bitcoin broke above March's high, which essentially canceled this signal from the top. It's bounced off the 50% level, and on the weekly chart, we found a relatively good close here. Now, it's not the strongest close because, like we were watching from last week, we were looking at the prices pushing past those previous tops, especially on the daily chart here, just testing those levels. That was that top from March when Trump came out, put his tweet up about the Bitcoin strategic reserve. Prices have gone to that level and now rejected from that. So in terms of the pattern, we've got a double top here. It doesn't mean that the double top has to play out to the downside and produce a mega crash. But in terms of symmetry, the symmetry is looking relatively good. If we just focus our eyes on this 50% level, even if this were to break down from 92, doesn't mean it has to, but even if we were to break down from 92, break down from these highs here around $89,000, that top, you've still got a 50% here at 85, which is at a pretty solid level above all of the previous resistance before the market broke out on Monday 21st on increased volume. So it was a good breakout there. The worrying part here on the short term for BTC is if we were to see a decline and then a break underneath 85K and some daily closes under that level. That would essentially lead to more churning and potentially more reaccumulation if the price eventually goes higher. Otherwise, this was all a complacency bounce, and this area here of trading would lead to redistribution, and that would only be confirmed if there was a breakdown of $74,000. The positive signs for the bulls on the daily, on the weekly, and on the monthly, but of course, nothing goes up in a straight line. And in terms of the downside levels that we're watching, 92 is the best case scenario. Then you've got $89,000 is the next best case scenario for consolidation above that, so any sort of corrections, and then $85,000, $86,000. Anything underneath 86 is really going to lead to a longer consolidation. Now that could come in the way of the sentiment building up yet again for reaccumulation. You guys know that we have been following the 5 months of market sentiment reset from the previous highs. The market sentiment ran up into extreme greed, and then typically, like it's done over previous moves to the upside, it takes roughly 5 months from extreme greed to somewhere around that low point in the market sentiment. And we reached that 5-month point last week. However, the higher low on the market sentiment was reached at about 140 days. So just short of the 5-month period. So we're well within that range now. And what we've seen after that 5-month period is that it takes 1 to 2 months for the market sentiment to pick up, while the price action is also building from that point with higher lows. It can basically get back to some pretty extreme higher lows with extreme market sentiment, so extremely negative market sentiment. Whether it gets into extreme fear or just into fear on those pullbacks, we'll let the market decide. But anytime we see that over the next 1 to 2 months could be a good area for that base to form, the higher low, the buying up of the dip, and then a move back to the upside, which could take several months. Now, that also lines up with our composite cycles. So this is our TIA predictive cycles. You can get access to this with the TIA indicator suite. Along with this, you'll also get the TIA GAN Swing Pro. So that's what we use to identify our entries and exits into the market. But essentially, just going back to the predictive cycles here, I'm using the halvings and just taking off 2012 just to give us a bit of a clearer image here of a potential roadmap for BTC. Now, it's following something similar to a few of these years that I've shown here, and not necessarily the bull years. We've seen a drop-off in March, pretty heavy drop-off, obviously, and that also happened last year. And then times got even worse in April, so there was still a correction on the purple line here. We're watching the purple line in the background as the roadmap. The blue line is what is actually happening. And if things were to progress similar to those previous years in the halving, well, then you've got a rise up until about June, but there is still some corrections along the way. That correction could be coming up here because we've had a decent move to the upside, in which case that would be slightly earlier than the May correction. And then there's a significant correction there in June. Now, I've talked about August and Q3, but let's just focus on, that's in previous videos, but we'll focus on Q2 for now. So in this case, if it is following a similar cycle, we can look forward to higher prices over the coming months, but it's still all part of the consolidating pattern with corrections that would then potentially lead into some nice higher prices above roughly $100,000. That lines up with what we're talking about with the market sentiment, especially looking at the fear and greed index, and of course the price action as well, just above those 50% levels of $92,000. So in addition to the price action, the timing, the market sentiment, the daily exchange volume. So basically, is there lifeblood coming back into the market? The exchange volume has picked up a little bit here over the last few days. The lows are still lower, the highs are still lower. But what we've seen in the previous times, similar to 2024, is that those lows can basically base around for a couple of months, which is essentially explaining the same thing in terms of the market sentiment. The sentiment is building, the price action is building, the price volume is also building. And if this is to sustain, then what we need to see next are at least some minor higher lows and eventually some minor higher highs. When I say minor, it doesn't have to go above the previous swing tops. It just has to continue to form a basing pattern here on the exchange volume. Essentially, you don't want to see this continue to go lower than roughly around the high 20s to low $30 billion. Otherwise, that would mean we'd probably see further downside. The US dollar continues to break down, this time putting in 37-month lows. And if it closes roughly around here or anywhere below the 100.4 level, this would be its lowest close in 37 months, so over 3 years. Now, when we've seen this in the past, Bitcoin has gone on some pretty significant moves to the upside. The low has formed earlier in the cycle. In this case, we saw the breakdown in November 2022 for the US dollar. And then from there, Bitcoin has basically been rallying the entire time that the US dollar has been showing signs of distribution. Now, this took two and a half years to show signs of distribution, with a bit of a fake out to the upside just recently at the end of 2024, but now has clearly broken down to the downside and hit some fresh levels. So although the confirmation is still waiting on a few more days, it seems likely, at least obviously in my opinion, and this is my analysis here, I would expect that the US dollar would continue down throughout this part of the cycle, which would then ease asset prices or risk asset prices to go to the upside. So that alone could be enough to continue to push the price higher for BTC, even if the demand doesn't pick up anywhere near as much as what the news anticipates or the headlines anticipate or what the ETFs anticipate. We've got an update here from the ETFs. There are now 72 crypto-related ETFs sitting with the SEC, and we've also got the new SEC chairman that's been that's in, awaiting approval to list or list options. So this is from Eric, Senior ETF Analyst for Bloomberg. Everything from XRP, Litecoin, Solana to Penguins, Doge, and Millennia coins. Geez, so everyone's trying to get their ETFs in for any type of cryptocurrency. Now you can go through the entire list here. I'm not going to do that for you. It's going to take way too much time. But essentially, even if this stuff was all just a nothing burger, the fact alone, obviously in my opinion, that we're seeing the US dollar drop, and I suspect it'll continue to drop throughout the rest of this cycle leading into that real estate cycle peak, which I'll get to in a sec. I think that alone could at least give some, some power, some energy, some ammo to the Bitcoin price to carry on with the uptrend for now. Now, there's still 3 days to go for the monthly close on BTC. The good news is that we did see that break above the highs, which leads us to only 2 red bars. We can't get another red diamond above the bar here. This has happened and it won't go back this month. The coming months, like we saw on the composite cycle, with a potential move to the upside for May, maybe some corrections involved there as well around June, could lead to something like May going a little higher, June having a bit of a correction, and then we can start to push on towards the end of the year through that late Q3, maybe even into Q4 of 2025. Now, if that's the case, obviously we'll keep following here on the channel, let's have a look at some of the trends to the upside for the overall bull market. Now, this extension here takes the 50% level to around $121. So essentially just a little bit of hopium to the upside, conservative hopium, we'll call it that. That's the major trend. Let's have a look at something that's a little bit closer to the market action, and this is just using the reference range of the current move up into January, projected off of this April low. If this in fact remains to be the low, then we have some resistance at around 104. So we're still on the cautious side of the bull market because Bitcoin hasn't broken through the 50% levels yet, the 104, and then of course the previous highs at 109. But not to rain on anyone's bullish parade here, there are some pretty good signs on the weekly that Bitcoin's closed above $92,000. So that's the 50% level of this range. Like we looked at the beginning of the video, just keep an eye on where the coming weeks end up closing. Do you start to see it close below 85? That's a bit of a worrying sign. If there are corrections back to 89 or 92, not such a big deal in the overall scheme of things. Now, moving forward with the next 1.5 weeks, we've also got the interest rate announcements coming up. With what Trump's done with the tariffs, that's obviously led to a lot of business uncertainty and economic uncertainty. At first, the market thought we were going to get a lot of interest rate cuts. You got 1, 2, 3, 4, 5 interest rate cuts into the beginning of 2026. However, it's now firmly, at 90% that there's not going to be a cut at the next meeting in about 9 days' time. The reason for this, when everyone thinks that there should be more and more cuts because inflation is coming down and things are getting a little bit tougher out there for the everyday person, because whatever Trump's done with tariffs and breaking a bit of business confidence out there, that has led to the bonds also dropping and the 10-year yields rising. So those interest rates going up. The market believes that the interest rate should at least remain on hold here. So that's something to pay attention to over the coming 2 weeks when this comes out, and then also how the market responds to the stock markets also finding their way back from those lows a couple of weeks ago. Talked about the USDT dominance as another bullish indicator for Bitcoin and cryptos heading up. Over the longer term, we still need to see this breakdown from 5%, which is what happened. Well, it came back to test 5% last week, and of course, tested it, bounced above. So you can still see the uncertainty here for Bitcoin in terms of breaking out to a new fresh highs. But overall, there is a slight edge to the bulls for Bitcoin and to the bears for the USDT dominance, because we've seen another lower high form and a breakdown of the weekly swing low. So all that's left is another couple of breakdowns of the major 50% here at 5% and 4.75%. That's going to give a lot more breathing room to Bitcoin and cryptos for those to go up. And of course, everyone's waiting on what's happening with Ethereum and altcoins as well. The total market cap may give us a little clue here. It's still in a much, much weaker position than what BTC is in. It's underneath the previous high of 2021. It's put in 4 lower highs and lower lows Yes, there is a green, two reds and a green, but they are lower highs and lower lows. So although we might see a rally here for the total market cap, this includes stable coins and every single cryptocurrency in existence, this could be, we've got to be on the watch out for any sort of lower high forming here, maybe a double top, maybe a slight break and a close under. You can see what happened in the last cycle. There was a break above and then some closes back underneath that swing top. That would be a bearish signal over quarter. I'm looking at this in terms of the second half of 2025. Once we get out of the woodworks here for BTC and potentially see some higher prices in the short term, watching for how the market responds to the previous resistance levels that have been put in. That's going to be the key, I think, to any sort of sustained altcoin seasons to the upside, or if we're going to see some minor altcoin pumps again. The ETHBTC chart on a monthly basis here, 3 more days to go, is trading at one of its lowest levels, almost in history, but basically you have to go all the way back to the COVID low and just before it. So that is a very low closing price here for ETHBTC, and we still haven't seen any signs of this breaking back to any previous resistance levels. A couple of the first levels there on a macro basis, you're looking at 0.023, 0.024 as at least one of the first signs that this is going to recover, and then you see a sustained move in altcoins. Otherwise, it could be all short-lived again, and you'd probably expect to see a lot of their traders getting out of the market relatively quickly, as opposed to buying and holding and then waiting for this next altcoin season to run things up to higher prices. So with the volatility remaining in the traditional markets, the uncertainty through the US dollar, the bonds, and the yield, the markets towards the peak of the real estate cycle are definitely favoring the swing traders. Shout out to Polkadot Fanboy, who is jumping on with TIA Premium. There is a sale, as I said, coming up this week, and he said he was going to join once he makes $10,000 in a day, and he has done that. So congratulations to Mr. Fanboy hitting his goal of $10,000 in a day using the swing trading strategies. I'll leave a link to that in the video description. And before we wrap up the video, I did say I'll look at the global money supply with the conversation that I had with Real Vision. Now I'm looking at Bitcoin versus the NASDAQ. And essentially, you're looking for the asset that is going to outperform in this stage of the cycle, because the global money supply will be increasing, or has already started increasing. However, that is not going to go across the board to every asset that everyone holds. It's only going to go across to the stronger stuff. And so in our discussion, I put the question to Real Vision as to why this would be the case. And a nice, easy way to look at this is if you were to compare one asset to another, using a chart, because that's generally the easiest way that you can see where the money is flowing to, or which one is stronger than another. And that's what we do when it comes to Bitcoins versus altcoins. Are the altcoins outperforming BTC? Like you can see in the case of Ethereum, no, ETH is not outperforming BTC and just continues to fall. Therefore, just in terms of the charts, probably not the greatest place to be putting the money longer term. Short term, you'll get different trades. Longer term, maybe not. But in terms of Bitcoin and the NASDAQ, a big market that everyone knows about, Bitcoin has been outperforming the NASDAQ. Therefore, you would anticipate, it's not guaranteed, but you'd anticipate bigger gains from Bitcoin than from the NASDAQ if you were to be getting in based on the global money supply increasing. Now, that doesn't mean it's going to continue on forever. And like we've seen with the global money supply, sometimes it needs to be fit in different ways and it's forever getting changed. And at some point towards the end of the cycle, the money supply will continue higher. However, the asset prices may have topped months before. And that's where your trading system and strategy needs to come in. This is all part of the discussion that I had with the guys at Real Vision in terms of where this top comes in. Because it doesn't mean just because the money supply is going up that the top for the assets are going to continue on. It often happens that it could be months before that these, in the case of Bitcoin or other cryptos, that they will top earlier and you'll still see that supply going. So really important one there to note about that global money supply. I'll go into that in future videos as well. We'll keep up to date with that. Remember, you've got the sale coming up for TIA Premium this week. Congrats again to Fanboy hitting his $10,000 in a day, 14.5 grand. Congratulations. Position close there. Amazing work, amazing work. And I'll see you guys back at the next video. Like, subscribe. Cheers again, guys. Peace.